All right, welcome back. 44 minutes after. Gold is higher in New York trading today as a drop in the dollar increases demand for the precious metal. Patrick Chidley is a mining analyst over at Barnard. Jacobs Mellet USA. He is neutral on gold prices for the near term, but bullish long term. He joins us now from Stamford, Connecticut. Did I mangle the company name?
No, you got that correct, yeah.
All right.
Jacobs.
Gracious of you. All right, Patrick, thank you. Hey, let's talk about what we've seen in gold. It's come back about 7% since early June, moving back below its 90-day moving average. Where do you think gold, Patrick, goes from here?
Well, the summer months have traditionally been fairly weak periods for the gold price, especially early on in the summer. In the last few years, at least, there's been a bit of a pattern. Mm-hmm. I do think that we're going to be bouncing around in this range for the next couple of months, with gold not really going anywhere on the upside necessarily, but also well protected on the downside.
All right, so range bound near term, Patrick, but long term you are bullish, yes?
Yeah, long term I am bullish. I certainly do believe that we are going to head towards some currency devaluations across the world, not just the US dollar, but other currencies as well. And I think that's going to be good for gold.
All right, so good for gold. How good for gold? We're at $920 today. We've been at $1,000 at its peak. Where do you think the high is?
Well, I think we can see some more increases in gold coming towards the end of the year, maybe the fourth quarter. Mm-hmm. And I think we're calling for, I think it's $950 around about that time. So between $950 and $1,000 would be our range for the end of this year. And then going forward, we see good potential for increasing investment demand to drive the price quite a lot higher, in fact.
And Patrick, you mentioned some of the currency devaluations. I mean, is that the catalyst that gets it to those higher prices?
Yeah, certainly that would be, I think, something that would drive more investors into gold. The last sort of year and a half, 2 years, has seen dramatic increases in investment demand in gold. And particularly these ETF products as well. That's really where a lot of the money is going.
All right. So based on your outlook for gold, Patrick, I mean, what's your top stock pick, equity play here when it comes to gold?
Well, actually, at the moment, we like a stock called Royal Gold. It's actually a mid-cap name. It's a royalty company, which means it makes its money off royalties on gold properties that are in production already. And it also has a pipeline, a very interesting pipeline of growth projects as well, which we think is the market is currently undervaluing, and hence that's the reason why we like the stock.
It's down about 16%, though, since late June. You see that, what, a little bit of a valuation play as well?
Yeah, it's a valuation play. In fact, mainly it's a valuation play. Most of our calls, in fact, all of our calls are relative in the gold sector. And we see this one as being a particularly good value based on I think, some future growth that the market's not yet pricing in.
Just 20 seconds left. Harmony Gold, also a valuation play. This stock's down about 25% since early June.
Yeah, we think Harmony's getting into good value territory, and certainly I think people should be looking at that, despite the fact that, of course, the South African rand has strengthened somewhat, which takes the shine off the profitability of the company. We also like Newmont, I should mention. I think that one's looking like a good, pretty good value in the sector at the moment, and also pretty good value, I think, versus a lot of other industries as well.
All right, got to run. Hey, Patrick, thank you so much. Patrick Chidley, mining analyst, joining us on this Monday.